What's up, Greg?
Hey Ash, how you doing?
You sound good, man. How's things going with you?
Yeah, doing well. No
So,
complaint. Good to
it's
chat
great.
every
It's great. Mike asked me to do this today, so I had to get myself updated on the futures market real quick, man.
Yeah, that's yeah, it's great.
Hey,
You don't have to watch them every day, so that's probably good and bad at times.
yeah, well, no worries. So welcome to lumber from the. Did we say call from the free seats? Is that what we're calling this one today?
Yeah, no longer the cheap seats, it's the free
I
seats
think
now.
free's a lot better.
Yeah, yeah.
So Greg Kuda, Westline Capital, Ashley Buckle, Materials Exchange. Hey, so look at, I mean, I guess I went and updated myself on what's going on here. I took some notes, so you can help me with this one. So tomorrow, so we're limit up today. It seems like Canfor, one of the mills, came out and made some kind of announcement again on some curtailment issues. I don't know what that exactly is.
Yeah, if you I can pull it up here. If you share your screen, Ash, or
Let me see if I can
let me share
share my
my
screen.
let me share mine. I'm gonna share mine and let me know if you can see it.
Yeah, for sure, for sure. Otherwise, I can share my screen with you too, I think.
Yeah, so you should be able to
Can you share a screen, Nick? Is that how we do that? Okay. Yeah, we'll share. We can share our screen with you. So, what did you want to pull up, Greg? There
there
we
you go.
go. Yep,
Yeah,
perfect.
so you can see, let me blow this up here. So Canfor basically announced another 150 million board feet in December and January. So extending kind of holiday shutdowns. I think the big takeaway, BC and Alberta. And so my understanding is that they're probably running about 75% capacity in that neighborhood. If I had to wager a guess. And then the other news is that there's another BC sawmill, large sawmill, that's going to curtail stud mills and a plywood mill. Um, that'll coincide around the holidays as well. I don't know if they're officially going to make an announcement, so I'm not going to say anything, but that news is out there as well. So, that being said, when you look at futures today, we're limit up in January, so we're up $24 in Jan, 415.10. There's 27 in the pool right now.
So, and now we had readjusted to 24 a
Correct.
month. Okay, a month ago. So, interesting. Tomorrow would be a real test because if we gapped above the trend line, we basically have been trading sideways for 3 weeks. In theory, if we did gap above there, that old trend line could become, that's when where resistance could then, in theory, become support if you could trade above it, right?
Yeah,
Uh,
absolutely,
and
absolutely.
and then I just did a little brief thing looking through the commitment of traders report, and maybe you can help. So it looks like we have about 1,500 funds that are short.
Yeah, we have. I'll pull up, and we'll come back to. I'll jump to
And while we're
see.
doing that, I was going to say, so, but really, we run back up to 435, 440, where cash really doesn't do a lot because last Friday's print was like 365 mil and begging, so to speak, right?
Yeah, yeah. No, I think at the very least, you're probably going to see the low end of print tonight. We'll see if we're unchanged, if random actually prints down, but you could begin to make the case that you're toward the low end of print. And amazingly, with the limit up move in futures, um, you're probably seeing that basis between cash and futures grow. So one inevitably will call the other one out, Ashley. I mean, you're either going to have cash engage here to justify the massive premium building in futures, or futures, cash is going to go nowhere fast, and futures is just going to inevitably get called out, and you'll collapse it back into physical
So
cash.
interesting thing before we got on the call, Greg, I was talking to a few people that we mutually all know, and they're like, "Hey, look at we've got some basis trades on now, but this really, if you want to sit around on some stuff till maybe March, there's some pretty good basis opportunities out there right now, right?"
Yeah, and again, my big thing, I think with basis is simply capturing the differential when you get that when you get that divergence between cash and futures. you're capturing that difference, which is the basis, cash minus futures, and you're not looking to capture 100. You're not looking to capture dollar for dollar. If you can capture 80, 85 cents on the dollar, that's what you're looking to do. So from a true basis standpoint, you have to be willing to put the wood on the ground. And more importantly, you're not speculating that one has to go higher or one has to go lower. And I think that's where people get in trouble, where I only want a basis trade if futures goes lower. And I can buy back my shorts and futures, stay long the cash. So that's the big misnomer.
You
And
mean you
that
can't?
all
You mean you can't make it on both sides, Greg?
well, I know from an industry standpoint, Ash, this industry loves to talk a good game and try that, but
No
that's
doubt.
kind of inevitably where people get hung out, is that the wood is rolling, and I'm a basis trader until I got to find a desto for the wood, or I want a basis trade, but futures has to go lower or
You know, it's
cash has
interesting.
to go
It's
higher.
it's interesting. Some of the basis trades I put on over my life, I thought like that, and some of the best basis trade returns I've made is while I was losing money on my futures.
Well,
Right?
and so that's kind of from an accounting standpoint, that's where we try to beat it into people's heads. And I'm going to pull up
Yeah, really. I mean,
another.
I look at my P&L on my futures, I'm losing money, but you know what? You're getting a premium for your cash because the market's moving.
Yeah, no, absolutely. And when you look at, I didn't include this one in my slide deck, so let me know.
Yeah,
Let me see if I can. You can see that. But here's an historical basis chart, and again, you're toward the low water mark. You get to 50, 60 cash trading under futures. That's typically kind of the low end. Obviously, we can go lower than that, but in a market where cash is sub 360, sub 350, from a basis standpoint, I think the other big thing that I want to stress here is that, how realistic is the last 2 years versus what was prior to the pandemic? I mean, and I know we're jumping around here, but when you look at, and we showed this chart last week, Ashley, we'll come back to some of this, but weekly continuation. Okay, so November went off at 450, 480.
yeah,
January, the low so far is 380, 280. Well, what's the significance? Well, outside of stair stepping down, the significance is you're back to pre-COVID expiration levels now, or you're
yeah.
within striking distance of those pre-COVID type levels. So you've had a massive reversion back to mean type pricing, and it's further evident when you look at so here's a 2-year histogram of lumber futures. So the last 2 years, 47% of the time, we've got conditioned where the market trades at $500 to $1,000.
You know what's funny, Greg?
20% of the time, 950 to 1350.
Yep.
So this is what we've just spun out of the last 2 years, where if you weren't hitting home runs, then you didn't even play in this league. Everybody
So
was a home run, swing for the fences type trader.
so I like looking through social media when I'm on the train in the morning, working on my laptop and all that. And I opened my Twitter feed up today, and guess what I saw? People talking about lumber that aren't in the lumber business, making comments on lumber now, saying
Yeah, yeah.
how low it is. And in historically in my life, that's been when the market's about ready to make a turn, when everybody outside of the industry that may be a financial expert but saying, hey, look at lumber, they're just starting to catch up to it, where this is stuff we've been talking about for 6 months, right?
Well, it's always when you see it in the Wall Street Journal or one of the big publications, you always want to fade that news, because by the time it's out there for the public to disseminate, tell me lumber was a sell 6 months ago, 3 months ago. Don't tell me that lumber is a sell today. It might be a sell from a basis standpoint, but you have to have very specific reasons, rationale for what you're doing. And so here's the last 2 years. So here's the last 5 years. You can see how that 400 to 650, still 42% of the time, 350 to 400, 22% of the time. Take out the last 5 years and just do a 10-year. All of a sudden now, well over 50% of the time, you're between $300 to $500. So you've definitely, the bloom is off the rose as far as what transpired the last 2 years, actually. And
Right.
now we've had some reversion to the mean, and this is where you have to understand not only basis, again, cash minus futures, but you have to understand historically where certain items trade, the relationship between different species, the relationship between different items within those species, and between the different species themselves. And that's where you understand, what's my risk to reward. And the other huge part of this, we know that inventories in the field are lean, that the demand component is still falling. We haven't been able to basically say that demand has bottomed out just yet. And I've always used that analogy. Excuse me one second. I'm just
Yep.
gonna. We've always used that analogy that demand is the speedboat and supply is the meandering oil tanker. And this time is no different. The demand has fallen off a cliff a lot faster, a lot harder than all of us anticipated. The shift away from single to multifamily has been catastrophic. So the supply side now, with these curtailment announcements from Canfor and inevitably with some of the other mills, that's what's needed to figure out the supply side. With demand still not being quantifiable, have we bottomed out with demand? And that's the difference between this year versus the previous 2 years, where organic demand was still dramatically there. And we know that there were supply constraints. We had floods, we had mudslides, we had forest fires, but this year you need the supply constraints. But on these spikes off of these supply constraints, the demand better be there to support these moves higher. Without that underlying organic demand, then you sell all rallies in this market because you're in a bear market structure, pure and
Yeah.
simple.
So back to my thing is like, okay, do we go to 435, 40 with nothing going on in cash? Now, one of the interesting things talking to one of my a couple buddies of mine that are big distributors, what they're seeing right now is inventory building at their distribution level and turn slowing, right?
Yeah.
And basically what you just said. And so the message that comes back from the leadership is, hey, uh, find some liquidity, try to improve your turns, quit building inventory. So we're still in that. And I mean, that's a product of that. What do you have different basis charts? I'm so curious to look at the 2x4 number 3 Western chart versus basis right now. Like it's
We build all that stuff. I don't have it with me in this slide deck right now,
no
but that's
problem, no
stuff that,
problem.
yeah, we have basis out the yin yang as far as pick a species, pick an item. It's basis galore. I mean, just basically, and I'll jump back to the basis charts in a second, Ash. But so when you say, where can this market get up to? Well, the previous 2 days you broke out underneath the Bollinger Band low. Now you're trying to get a reversal. If you could close above yesterday, if you could close above the Bollinger Band, which is in this 396 area, you could close above yesterday's high, the previous day's high, which you're going to likely do today. It just opens up the upside here. The 9-day is right in this 415 area. Above there, then you're talking about stops in this 425 to 432 area. If you can break out above there, then the Bollinger Band high puts you back into the 450. Before we can worry about what lies ahead of 450, if this market truly is bottoming, then you're going to have to get futures back into this 450 area. You're going to have to see a continued build of open interest to see new buying come in, because that's the other big thing on this downtrend here. You in the last week alone, we've put on almost 500 contracts in futures. The vast majority of that has probably been commercials, basis trading, selling the premium in futures, and then also probably
Yeah.
commodity funds adding to their short position. So if you're just going to have a short covering rally here where you stop all these kind of late to the party sells, that's great, but that's where you get that spike higher. The second those bids disappear, the market falls back to reality. So for me to believe that you're going to go back to 450 plus and stick the flag, we did it, you're going to have to see open interest maintain and build, where people actually want to chase the momentum, get long with that momentum. And I think that's easier said than done until we get the comfort, the confidence that cash is officially bottomed and people are in a accumulation buy mode. Because, you know, you referenced it with some of your large distribution friends. I see that with some of my independent distributors as well, where for the first time in 12 months, the first time in 15 months, they're actually building inventory, where the
Yeah,
biggest supporter of distribution all along has been the large national retailers that didn't want to
that's
build the
right.
inventory themselves. They've been relying heavily on those geographical locations where if you own it, I'll buy it from you. Those churns have slowed down dramatically, where now you're starting to see inventory build. And historically, seasonally, this is when you do build inventory, but you are seeing inventory build at the distribution level. So not all the inventory is held at the sawmill level. There is, you know, signs that you are building inventory in some other the other pockets here as well.
No, no doubt. We talked a couple weeks ago, or the show last week. You know, one of Matt Beamer and Greg Riley and I about, you know, look at the big chain yards. If they're doing some multifamily, yes, but these big yards that have consolidated, that had these independent buyers that used to be able to autonomously buy whenever they wanted to, and in most cases would have already built wood for the first quarter, even for the limited amount of business they have really been told you're not buying anything. And it's amazing they're transferring inventory amongst yards. They're they're doing whatever they can to not buy anything. And one reason is it's more expensive to keep inventory. There's a lot of unknown. A lot of these places rely on single family homes. And some of these, you know, I had a buddy tell me we're shipping out X amount of siding packages versus uh, framing packages. So a lot more because builders right now are trying to complete what they already
Right.
have done and are not and for the most case not going out and starting a whole bunch of new items. They own land at a good value. They have a bunch of stuff, but they're kind of sitting back and waiting too.
Yeah, no, and I think, and I'll jump back into some of the housing stuff. And, you know, Matt Lehman just said cash shorts are very nervous, and I guess my question is, are there a lot of cash shorts out there that need immediate coverage? I think that, you know, the model for the jobber type guys out there is that you're always taking those cash shorts. You know, as the jobs come due, then you plan ahead. Where, you know, with this structure, you know, and so this is the perfect, you know, look at this year. So this is what you're looking at here, Ashley, is the basis, January basis between cash and Western SPF 2x4s. So this is Western S 2x4s versus limit up futures right now. So even limit up here, cash is still a $32 discount to where futures are. And I'm not saying that right. I don't think this is 100% accurate here. This is a 365 cash last week's print. So you're this is obviously this should be an actual bigger number. But my point here is that futures trading at a premium to physical cash right now is your bear market structure. If you're ultimately going to bottom out, this is the structure you bottom out in, where cash can't be given away. Cash is your best buy. Futures is your best sell. If you're going to ask me, should I be buying cash or futures today? No, you shouldn't be buying futures limit up. You should be go buy the cash. I know you can buy cash cheaper than 415. You know, the issue people have is, well, I've been good deal to death. I can't buy the cash. It's not the timing. I can't ship it early. So you have people kind of stuck, you know, where, you know, they're
Well,
potentially short the cash, but they physically can't cover it yet.
one of the things that's always hard in this market from being a distributor before, um, you know, you can never average your price down in a down
No,
market, right?
no.
The only way that you average your price returns is by the market going back up and through your
Oh,
cost,
you know,
right?
I'm sorry, Ashley. I'm looking at, this is last week's January basis chart. This is today. This is correct. So you can see how even with this limit up move in futures, how the basis has widened between cash and futures. Where, you know, again, when you look at this, I go by the cash. If there's any worry of downside risk, I immediately sell Jan or March against it. And I'm willing to put the wood on the ground and capture that basis. There's a $50 basis to capture here. In March, there's a $56 basis. In May, there's a $65 basis. So again, what this tells you is that cash is still the best deal out there right now. Western
Can we
SPF specifically is a pretty good deal relative to the other species, relative to futures right now.
So can we go back and look at commitment of traders
Yep.
again? Greg, where's the smart money at right now? Well, we usually consider that industry,
Well, I
right?
mean, yeah, I mean, again, these are your producers, and you can see, this is part of the problem is that the managed money has been basically short. When I'm going to jump all over here, but when you go back to, we'll look at, so the managed money started to show up in this May expiration into July, into this time frame. This is when the funds got short, actually, right here. So
Okay.
they've rolled from
Okay.
May into July, July into September, September into November, and they're still maintaining a large. When you go back to CFTC commitment of trader numbers, they're still 58%. At the high water mark, this is about 64% of the market, but the 800-pound gorilla in the room is still managed money fund shorts. Now, we know that the industry mills never got short this market. They continue not to be short. And this is part of the problem. When you're not short, you can't support the market by short covering. And the industry is long, but when you look at, kind of look at the percentages here, the obvious one is the managed money shorts. And at some point, the expectation is these guys will exit stage left. They'll be done. They'll take their money off the table. But until that happens, we know by the end of this month, they're simply either, if they're not going to liquidate their short position in Jan. And so,
They'll just
yeah,
roll
they're
it.
going to roll it into March. And so 95% plus of this is in the January contract.
When is the traditional date? Like if people look at the Rogers roll and they follow
So the
that, they
Roger,
usually like
yeah,
to
yeah.
roll
So
that.
the Rogers roll took place the end of November, beginning of December. The short funds, it's not so much one or two. It's a course of a couple of weeks, 2.5 weeks, where anywhere from, today's the 6th, they could start anywhere from the 11th, 12th of December through the end of the month. And my guess is it will probably happen sooner this year, just for the simple reason you're going to bump up against Christmas, and you know a lot of these guys will be out of the office. So my guess is over the next 2.5 weeks, you'll see the vast, if they are truly going to roll this position out of Jan into March, you're going to see that spread. You're going to see that spread roll come into play in the next 2.5 weeks here.
Brian McParlin was saying pre-2017, we would climb all over a $30 basis. A $65 basis is not enough today, considering we were plus 125 this time last year. Volatility is too extreme to risk anything under 100.
And I don't disagree with what Brian is saying, but the one thing
Thanks, Brian, for
yeah.
commenting and watching.
So 2 years ago, what were your price ranges a year ago, 2 years ago? And the market was trading off of $1,700 back to 1,000, back to cash bottomed out at 386, futures bottomed out at 454 last August. Not this August of this year, but a year ago in 2021. So this goes back to the last 2 years. Are these anomalies, or is this what we expect? Because a $50 basis on $350 to $400 wood, I'm not a mathematician, but that's a pretty good percent opportunity if you think that we're going
Pretty
to be
good take
stuck.
rate if you can get it.
Yeah, if you're stuck in this $350 to $500 trading range, then that $50 basis is normal. That's actually more extreme. If you think we're going back to some magical number of 550, 600, you're going to go back and fill these gaps, then I agree. You wait for a wider basis, but that's kind of where I'm at. Know your market. Is this the last year? Are we going to see demand come storming back into this market? Have the mills done enough to justify prices going back to 500, 550, let alone 600, $700. I'd love to say that those are realistic expectations, but what have you seen out there from a demand standpoint or from a supply constraint standpoint to suggest that we deserve to be back at those numbers? What I see is Q4, the mills are going to get annihilated with their earnings. That's going to be the watershed moment for all markets, not just lumber, where the real pain and misery is coming with Q4 earnings, and you're not going to see those until you're well into Q1.
So, question for you. I know I was trying to look down below when you had the open interest up. How is old contract versus new contract doing?
So,
Because this is something where you can help me educate me on this since I have not been paying attention
so
to it.
we're gradually, sorry, there we go.
No, you're good.
So here's the old legacy contract. And again, legacy expires May 15th. That's why you only have the May. And then you see this is the mini contract here. So this is built up by about 125 in the last week and a half, 2 weeks. So
Are many people rolling old into new
yeah,
yet?
you're starting to see more and more of that.
Yeah.
You're definitely you're definitely starting to see more and more of that, actually. And I think as
Because
you
my biggest feedback from people that I know that trade a lot of it was when they take orders and basis and do different transactions based upon all their history of the old contract, they're afraid to roll into a new unknown contract, how it's going to act. It has, in theory, it should
oh,
act as people say,
I
but
mean, again, that's we're all pioneers here, and that you can look.
so what they're saying is they really want to start new stuff in those
Yeah,
contracts instead of rolling old stuff
and I
into it.
think that makes sense. I mean, the beauty of something like today is we're locked limit in January here at 415. The actual January mini contract has a $50 limit. It's a 10% limit. So, if there's arbitrage that you can take advantage of, then, you look to take advantage of that. And as you get through January expiration, as you round the corner into March, there's no going back. So you're either not going to trade lumber futures anymore. And I've had people tell me, I'm done trading. Okay. So you're going to trade the new mini contract, or you're not going to trade.
So
This is a
Brian
point
made
of no
another comment.
return.
It all comes down to the direction of the market at convergence. If your cash is weak at the time, you won't see the first 30 or 50% of the basis buffer. That's true. I mean, part of that is when you put a basis trade on, like you need to have the liquidity. It has to be the right timing at the right time, because if you can't catch a bid in the market from somebody when you're trying to unload something, um,
Yeah, no,
yeah,
absolutely. Absolutely.
I totally hear Brian saying, and we've all experienced that
Well,
before. It's
not
not
only
fun.
that, but
Right.
so from a basis standpoint, are you buying vendor direct, or are you buying mill direct? What's your relationship in the food cycle, in the food chain here? And if you're buying vendor direct, you're probably not going to see spot market prices for 30 to 45 days. If you're buying mill direct, then you're more likely to see what random is showing, or within a certain percent of random. It just, where are you in the pecking order? And are you an SPF guy? Are you a Hemfer guy? Like, what species are you buying? And all these things. That's why, from a basis standpoint, we can show these basis charts, but they're meaningless unless they're specialized, customized to you, and you understand your business. And that's how you engage in the basis. You have to understand your own business, and that's why, again, well, we don't want to. Well, basis might not be right for you. You might not be the right market, the right model for the basis trade. That's to each his
Yeah, no,
own.
no doubt. No, that makes sense. One other question. I know, talking to somebody the other day with this new contract coming in, what does the option volume look like? Is there much
Uh,
option open interest right now, or
it's
how's
no,
options right now?
it's pretty light, and I don't have that pulled up right now, but no, it's extremely light. And so, just everybody's aware, the legacy options are done. You can no longer trade legacy options. If you want to trade lumber options. It's purely the mini options. There's obviously,
I did not know that.
yeah, December
Okay.
just expired. So there are serial options. You can trade January mini options. I'm trying to trade the serial Februaries. I have not been able to trade those yet. January has traded, but are you anywhere near the volume that you were with Legacy? No, no, it's still
Okay.
options are still an illiquid market where, I tell anybody that's doing options in the mini contract that you're doing strike prices. Worst case scenario, you just live with it. You're either gonna either get delivered or exercised, and you live with those strike prices because you might not have the liquidity to get out on the other side.
Well, cool. I appreciate it, Greg. Hopefully I knew enough to have a good conversation.
Yeah,
I
no,
was listening to you and
absolutely.
Mike, and people love look at, man, everywhere I go, there's some people. So I do a show with Matt and Greg,
Yeah, and
and
it's fun.
then
I love listening to that show.
and Matt Lehman, and the ego side of me always is like, hey, hopefully people are watching my show. But like, I go to places and people are like, I just watch Greg and Mike's show because I love watching the future side of thing, right? And how they talk about the cash in it. So I thought that was really good feedback. I hear about your guys' show all the
Yeah, and
time.
if anybody, I know there's a bunch of other slides today. So if anybody
Yeah,
wants,
go ahead. Go ahead.
no, I was just gonna say, I know we're bumping up against the time, but if anybody else wants the slide deck, there's some other stuff. We update this every week, and it's got everything else that we normally talk about in here. So just reach out to Ashley, Mike, or myself. I'm more than happy to email a copy over to you if you want the copy of the slide deck this week.
Cool, Greg. Well, listen, man, I appreciate the time. Mike, will be back at it next Tuesday. Greg Riley, and Matt Beamer, and myself are doing This Week in Lumber tomorrow, and then Thursday, Matt Lehman and I at 12 o'clock Central Time do lunch with lumbermen. So I'm going to pull some of the ideas you had from your show and talk about them. But Greg, I appreciate the time, and anybody contact us if you want to look at Greg's charts.
Absolutely, Ash. Keep up the good work. I think all shows are phenomenal. I appreciate hearing everybody's commentary, and that it's as simple as education wins. It's just trying to educate the customer base, this industry, or you might not use this stuff, but at least you should be educated that it's out there. So thanks.
Appreciate it, Greg. Have a great day.
Good seeing you, Ash. Thank you. Take care.
Bye, buddy.
Bye.
Bye.